Yes, yes, yes. Today we're going to talk about 13 scariest trades to take in your small trading account. Now, let's go to the first one. The first one is going against a strong trend. I see this all the time with a lot of new traders. They always go against the trend. Now, here's the thing, right? So we have a strong trend. So the market is going up, and usually strong trends, right? You're dealing with shallow pullbacks. Now, from my experience, a lot of new traders, the reason why they go against the strong trend is because let's say that they were supposed to take this trade right here, right? And they missed the trade. They was maybe too scared to take the trade or whatever the case is, right? Now, all of a sudden, the market is going up without them and they get mad. Now, they say, okay, since I missed this move, let me just try to short this because there's no way the market can actually continue to go up higher. So what happened is they try to short right here, get stopped out, 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 and we all know what happens. So that's a very scary trade if you're trying to grow your small account. So the next one is revenge trading. Guys, if you're taking a revenge trade, that is very scary because what's going to happen is most likely you're going to lose, 99.9% of the time, okay? Because it's usually not part of your system. So you're going to lose that first trade, right? And what's going to happen is you're going to take another revenge trade, and you lose that trade, you're going to take another one. It's going to be a snowball effect. So you're going to take a whole bunch of different revenge trades because you're trying to make your money back. So you have to understand, guys, it's a waste of time to revenge trade, and it's one of the most scariest trades to take out there because you're trying to make back your money. And you're not going to stop at the first revenge trade. You're going to keep going until you blow up your account. So that's very scary. Now, the next scary trade is trading with no stop loss. Guys, listen. Okay, listen. Let's say, okay, the market is going up, right? And you are in the move. The market is going up, right? And let's say you buy right here. And the market is going up right here. And it decides to reverse on you. You have no stop loss at all. What's going to happen is the market, let's say that, you want to get out right here, but as soon as it gets right there, you're going to say, man, I'm down too much. You know what? I'm quite sure it's probably going to bounce at the support. Let me just hold it. So it bounced a little bit, right? And guess what? It crashed. It keeps going down, keeps going down, keeps going down, keeps going down. And what's going to happen is you're going to be down so much to the point where you are going to convince yourself to hold that trade. Guys, this is a very scary trade to be in. Trust me, I've been in this trade. I'm quite sure you've probably been in this trade before. It's very hard to get out that trade because you're down too much. You're like, man, you know what? If I sell it right now, I'm going to lose too much money. So this is definitely one scary trade right here. Now, the next scary trade is relying on an indicator to tell you when to buy or sell, okay? Now, indicators are good, but if you rely on an indicator without understanding market structure, it's not gonna work, okay? Because you have to understand the indicator is basically getting this information and moving up and down because of price action. So you have to understand market structure first. If you just blindly buy every time, the RSI, so let's say right here, you have the RSI right here, right? And every time it's oversold right here, you're looking to basically buy the market. And every time it's overbought right here, you're looking to sell the market, right? And if you backtest this, you're gonna know that this is not a good strategy. The only way this can actually work out if you understand market structure. So you cannot rely on an indicator 100% of the time. You have to understand price action. And then if you want to, use an indicator, that's the best thing you can do. Because if you just rely on an indicator, guys, man, that's a scary trade to be in. Now, the next scary trade, guys, is a news trade. Now, I'm telling you right now, I know a lot of people will, maybe trade the news or try to trade the news, but, especially if you're trading maybe a Forex account, the spreads are wide and crazy. And not only that, the slippage is crazy, okay? So if it hits your stop loss, it's not going to just only hit your stop loss. It's going to probably go way past your stop loss. So let me show you an example. So let's say that, the market is, just giving you news, right? And the news just shot up like this. And then it shot back down. And let's say that your stop loss is right here, right? The slippage is going to be so much to the point where it's going to stop you out, but it's going to fill you right here. Instead of filling you right here, Okay, so instead of losing $100, you might lose $1,000 because of the slippage. So that's a very scary trade to actually get in as soon as news comes out. So to me, the way I like to do it is I like to wait at least 10 to 15 minutes right after the news and trade that way. Now, the next scary trade is trading right at the open. Now, trading right at the open is basically the same thing as trading the news, okay? As soon as the market opens, the market is wow. So to me, it's best to let the market show you its hand or show you some type of, direction before you hit that sell or buy button, because the market can whip up and down or it could chop around a lot of times. Trust me, I see a lot of times how, traders will basically, maybe go on a winning streak, trade in the open, okay? And then one day the open is going to be like this. It's just going to be choppy. It's going to just go right back and forth. And then you're going to lose your money because you're going to try to sell right here, get stopped out, try to buy right here, get stopped out, trying to sell right here, get stopped out, trying to buy right here, get stopped out. So it's going to be very, very choppy. So to me, this is a very scary trade to trade as soon as the market opens, especially if you have a small account. Now, the next scary trade is averaging down with no plan. So basically, honestly, there's nothing wrong with averaging down, but you have to have a plan, meaning that you have to have a place where, okay, if the trade goes wrong, I'm out. So let's say, the market is going down, right? And you see a support right here, okay? And you want to give it some room. So you say, okay, I'm going to give it some room right here. So the market is going down and you start to buy right here, right? And the market is going down some more. You start to buy some more right here, going down some more. You start to buy right here and then go down some more, right? And for a fact, if it goes below this level, you're out. But let's say that, you are averaging down and you have no plan at all, meaning you have no place where you're going to say, all right, if it goes down here, I'm out. And if it keeps going down, guys, and you have no plan and you just averaging down, you're going to lose a lot of money. So to me, that's a very scary trade to be in if you have no plan. Now, the next scary trade, guys, is selling that support or buying that resistance. Let me show you. So let's say that we have resistance, okay? And we all know that resistance is like a ceiling, right? As soon as it hit that ceiling, it sells off, and support is like a floor. So let's say that we have support, resistance right here, right? And I see this all the time. We have support right here, and you see the market going down, and you're looking to sell right here. Why? Why are you looking to sell right at support? Doesn't make no sense. That's a very scary trade. You know how much money I lost just by doing this? So you have to be careful, understanding that, you have support right here and even resistance, okay? You have resistance right here. You're gonna buy right at resistance, guys. That is a very scary trade to be in because a lot of times, as soon as it hit resistance, it starts to sell off again. So be very careful when it comes to that situation. Now, the next scary trade is over leveraging, guys. Listen, I don't care if you've been on a winning streak, whatever the case is, guys, do not over leverage. Okay, because let's say, you're used to risking $50 a trade and now all of a sudden you want to go in at $500 a trade, right? That is a very scary trade, especially if you have a small account because you're not used to losing that much. And honestly, $500 on your small account can actually be maybe, almost half of your account. So you have to understand, guys, over leveraging is a very scary trade and, you should have enough cushion to actually do that. Now, the next scary trade, guys, and I know a lot of people do this, is basically going late in the trend, okay? And the market's going up, right? And it's like, man, I missed this whole move. You know what? Let me just try to buy this right here. So you see the market come to maybe a support level, and you try to buy right here, it goes up a little bit, and then boom, stops you out. Because you're late in the trend. The market has been trending for a long time. Why would you want to buy right here? You should be buying right here or right here. Getting too late in the trend, guys, is a very scary trade, and trust me, I see a lot of people getting stopped out being late in the trend. Now, the last one, guys, is trading during lunchtime. Now, lunchtime for me is 12 p.m. Eastern time. So any time around there, 12 o'clock until maybe 2 p.m. Eastern time, anytime around that, the market is probably going to be very, very slow because, a lot of big players are not trading around that time and the market could chop around. So trading around that time, guys, is a very scary trade because you might lose all the profits that you made in the morning time. You might lose it in the afternoon because you're trying to force a trade when the market is very slow. So make sure you understand that trading during the lunchtime, yes, it could work. I can probably show you examples of, winning trades during lunch. But overall, guys, it's probably a waste of time and you should wait maybe later on during the day. What I like to do is I like to trade, in the morning time, 9:30 maybe to 11:30, and I'm done for the day. That's what I like doing, because as soon as the market opens, that's when a lot of volatility comes in and the volume comes in, and good moves are in the morning. So that's what I like to do. So those are the 13 scariest trades to take in your small trading account. Make sure you write this down. Make sure you study this. And if you want to learn the truth about trading, make sure you watch this video right here, because this video is going to show you the truth about trading. And trust me, it's going to show you a lot of things that you probably are not thinking right now.